everyone, this is Dr. Paz, and I wanted to give you an update for your assignment this week, which corresponds to current liabilities and contingent obligations. So what I have done here for you is summarize your assignment that you are to complete exercises 9-1 through 9-12. You want to make sure that you type the question followed by your answer. You can use the Microsoft Word document, you can use Excel, you can use a combination. I'm okay with that. Don't forget to include your name, the date, and the assignment name in the upper right-hand corner of your assignment. And if you do use Word, then it would be great if you put it all in one Word document or Excel, or just let me know and label it properly. And I think if you label it in Excel, make sure you're labeling each of the worksheets. So let's go over each of the exercises. So what I've done here is add for you the exercises and kind of show you here where you are, how you would calculate your inventory and your accounts payable and how the accounts payable is paid because of a discount. And you see that here. So I wanted to make sure I brought that to your attention. And then when we move on to the next exercise, we see that we are debiting inventory and crediting notes payable, and then we are paying 1/12 or 1 month of interest on the note at 12%. And you see that is in the 2016 year, and then in 2017, we're actually paying the remainder of the interest as well. So continuing with exercise 9-3, we see our cash here, we see the notes payable. Right here, you'll note that we are dividing by 360 days, not 365 days. So we're paying 90 days or 1/4 of our payment here for the discount on the notes payable. And then you see we also have a corresponding interest expense here. Then here you'll see a partial balance sheet where we're noting the notes payable less the discount on the notes payable, and then our rate of 3.093 for 90 days. Now moving on to exercise 9-4, you see we are completing several entries here, and these journal entries are on machine with a discount on the notes payable, and we need to get the present value. The easiest way to do this would be if you use net present value or NPV in Excel. You can do it that way as well to come up with this amount. And then you'll see you have your interest expense, your discounts on your notes payable, and then the recording entries for each of the corresponding quarters. And then moving on, continuing with 9-4, you see we have here a schedule of interest expense and obligations. And again, this is something that I would recommend that you complete in Microsoft Excel. This is just, there's a template. You can just look for an amortization schedule, or you can look for a interest expense or a notes payable schedule, and it has everything pre-populated for you directly from Microsoft. And our last portion of 9-4 is basically how you would show the PP&E, or property, plant, and equipment as an amount, and then you would show your current liabilities, the associated notes, less the discounts for that as well. Continuing with exercise 9-5, we're just presenting a partial balance sheet here for our current portion of the bonds payable and our long-term portion of the bonds payable. Then if we move to 9-6, you'll see something similar with notes payable, and then you actually see here the footnote disclosure that is part of the financial statement, and that is required. This would be a little separate on the actual footnotes, with typically the first footnote being a summary of significant accounting policies. Then we move on to exercise 9-7, which we're still doing the same thing. We're classifying the current and long-term portions of the notes payable. And this is a bit more of a verbose note because of what it's required, that the money would be available as of which date and how it would be used to retire these notes. Then for 9-8, we just have a list of journal entries that we are recording in terms of cash and deposit from the customer. And then we also have when we actually collect the deposit from the customer and give them cash as well, and then when we record the revenues. And we would have a miscellaneous expense for any type of forfeited deposits. For 9-9, we are again looking at gift certificates, which is unearned revenue, and then when we can record the revenue when the sale is made, and also how those gift certificates would be labeled on the balance sheet. For 9-10, we have entries of property taxes here, and you see the total amount divided by the 12 months, and then you see what you have your property taxes payable when you pay them, and you record the actual expense, and then the actual property taxes were paid. And then 9-11, you have more entries on the property taxes, as you can see here, and very similar to 9-10. And then, but in this case, we have prepaid property taxes. And then once we would have the expense, and then we would credit the prepaid property taxes to show that now they are expensed. And lastly, we have 9-12, which is salaries expense and liability for compensated absences. So you take the number of employees times the daily rate for those employees times the number of days to record the liability for a sick pay or vacation pay, how it would be presented on the balance sheet as well. So I hope you have found this useful.